All right, here we are. Let's go. Let's get her started. How's everybody doing this morning? Thursday morning. Looking forward to a nice weekend. The sun's shining and everybody's out and happy. Stock market shooting higher. Everybody's making money. Well, we got a couple in here that aren't. We got Super Micro's a little sad. But we're not worried about that one because we're selling options against it, and we got $970 on that thing right there. That's the one we're looking at. This 316-day leap. Yeah, we're a little bit underwater on that one. We need that baby to go for us, but we'll be okay on that one. I think we got $970, 170 to go. This thing's pretty dead. We'll let it go another day or two. Maybe we'll make a little bit more, $100 more. All right, that's the only thing we have to worry about on that one. This one here, you can see NVIDIA is rocketing higher. We're making a lot of money on that one, and we're happy on that one. So we're not going to sell any premium against that one until we get a little bit more of a opportunity for a pullback. So we'll just let that one run. That's a leap to 316 days on NVIDIA. All right, so we're okay. We're going to sell some premium against that. We'll sell some calls against it once it gets up there and starts to lose a little bit of its momentum. But while it's rocketing higher, there's no reason to sell a call against it. All right. Well, you want to kind of sell a call while it is going higher, but well, we'd have to count and measure, and that's a little bit beyond the scope of today's class. Let's get started here. So first thing I want to do is I just want to cover our portfolio. Let's see, this is the one right here, summer class curriculum. Now we've been talking about this. We're in the summertime. I'm a university teacher, and so we're just doing a little bit lighter course material, but this is the summer class. And right now we are Tuesday, Wednesday, Thursday. Thursday is sector, seasonals, utilities, consumer staples, and rotation in summer. So we're going to be talking about the seasonals, the seasonal nature of markets today. All right, so that's what's on the agenda. And if we come over here and we go to weekly objective, what is this is just the weekly objective. The weekly objective on this one is for our seasonal nature of markets. All right, so we're going to look at the seasonal nature of markets. And I want to bring up for you a tool called Trade Miner. Trade Miner is kind of a unique tool in that what it does is it goes out and it scans the stock market. Now we got two versions. We got the stock market and we've got the futures version here. And so we got two versions. This is the futures version. This is the stocks version. It's exactly the same, just the header's different color. And the database behind it's a little bit different. So what it does, it scans for seasonal trends. Now this is a neat little tool. If those of you who haven't seen it before, what it does, it comes in, it tells us when markets have had a tendency to trend at certain times of the year. Now, we have the saying in the stock market in the summertime called sell in May and go away, right? You've all heard that. But that's not necessarily something we want to do. We want to kind of focus in a little bit more on the stocks and the opportunities that occur in the summertime, because there's summertime events that happen year after year after year, same events that cause the market to rally or fall at certain times of the year based on seasonal events. And there's seasonal events throughout the summer that causes the market to rally. So specific sectors will rally. So where you want to look and find out what those stocks are, what those sectors are. So we're going to come in here and you can see it's just kind of like an AI system. So it has a prompt up here and you just fill in the little blanks for the prompt. So the prompt's all set out for you. All you have to do is put in your variables. So if you can see that, it comes in and it says search for trends in the month of. Now you can do a symbol and you can search seasonal nature of a specific symbol, but that's not the goal of today's class. We're going to do month. So we're going to search in the month of, and we're going to come down here to May. So we're going to find trends that have won at least, and I've got in here 80% of the time, and I'm going to just do bullish. All right, we're just looking for longs. We're not looking for markets that are falling. We're not going to take short positions in here. You could do both if you want, but we're just going to do bullish. All right, we're just looking for markets that rise during the month of May, 80% of the time, and we're going to list trends that last at least 10 trading days, but no more than 35 trading days. So that kind of that 1 month time frame is what we're looking for. So this is not day trading. This is more of a position trade that we're looking for markets that have a tendency to rally. All right, and then we're going to find that they have to be 80% profitable over the last 15 years. All right. So if they're not consistently winners every year, now we give them a little bit of a break, 80% profit over the last 15 years. Now that's the minimum. It's got to be at least 80%. It can be higher, of course, but we're going to be at least 80% profit over the last 15 years. Now we're going to try 15 years. We may have to go down to 10. We'll take a look and see how many results we get. We're going to remove the same symbol duplicate start dates and remove the same symbol overlapping dates just so we don't get a lot of crossover in there. And we're going to go ahead and we're going to hit search. Now this is going to go out and it's going to scan the entire stock market database. Now where have I got this set to? Let's go look. I've got it I got a lot in there. All right. So I got almost everything selected in there. Holy cow, that's going to be a big database. Usually I'll skinny that down and just come down and do something like the S&P 500 or something. Let's see what it does. Sometimes if you don't have enough memory, it can't do that much. I have to skinny it down. We'll see how much memory my computer has. See if it can do that many. So it's scanning right now. It's scanning a lot. So let's let that thing finish. Almost done. Okay, there we go. So there's our scan. It's 1,000. See that? 1,000 results. So there's 1,000 out of all the stocks that are in that in the settings, this entire list, which is a big list. We got 1,000 results in the month of May of stocks that have traded 80% of the time over the last 15 years. So we can skinny this down. We don't need it to be this high. Now there's ways that you can reduce this by clicking these headers. See these headers in here? If you sort on something, then you can sort by the headers. Now, one of them is the score. And the red, obviously, is not as good as the green. So we're going to sort by the greens. So we'll just bring all the greens to the top. Now, this is the easiest. Let's go see how many there are. There's a ton of them. Look how many greens there are. See, it goes greens, then it goes yellow, and then it goes red. What we could do is I was going to say, I want to just come in and just scan the S&P 500. That would skinny it down quite a lot. But for now, let's just do this. Let's just come in here and look and see what they are. It's kind of fun to see what some of these are. Let's come down. We can't do too many because we get too crazy in here. I want to actually scan by some other things, not just the score. Well, let's just do this. Well, because we can sort, but look, we can sort by things like the win ratio. So we can come in here and we can click the header, and those are all 80%. But look, we got some that are 100% over the last 15 years. So AVGO, Broadcom, over the last 15 years between May 23rd and June 9th, 100% of the time over the last 15 years has returned on average 7%. That's pretty damn good. Look at that. Not one loser during this time frame. Here's another one that's got 100%er. Now, these are all green. Here's some yellows down here that are pretty high, 94%. Now, the reason they're yellow is because they just probably have for example, you can see this one's got a lot of bottoming tails on it. So it's had a lot of drawdowns. Look at these drawdowns. So those will count against it, all right, and say, well, sometimes it's not just take off and run and go straight up. It kind of wanders around a little bit and has big moves, but goes nowhere. So that kind of takes away from the score. And so these come in here. That's why we got some yellows in here. Here's another yellow, but look, it's 93% of the time, 93% of the time over the last 15 years. This thing's returned on average, 3%. See, that's not that great. So we can sort by the average. Let's come in here and look at this one. It's a red. Jazz Pharmaceuticals, it's red. It's because it's got one great big giant month. That's why. And then all the rest are small in comparison. So, but that's between May 28th and July 14th, 81% of the time over the last 16 years. This thing's returned on average 27%. And the reason it gets a red is because 1 month was just holy cow, and the rest of them were kind of pushed down a little bit. So that's kind of not a good one. That's why it's got a red score in there. All right. It meets the criteria above of being 15 years within 80 and within the number of days in the month of May, but it's got some other things that are troublesome. So we can come in here. Now this one's green. Look at this one. And it's got a high average profit of 25%. So this thing really moves. So if you come in here, this is Mankind Corporation, and it's bullish it's got a 3.92% score between May 14th and June 24th, 82% of the time over the last 17 years, 42 calendar days. This thing's averaged a profit of 25%. That's pretty crazy. $2,468 on a $10,000 investment. That's wild. Mankind Corporation. That makes you want to go look at it, doesn't it? Let's go look at MNKD. MNKD. Where's our trading platform? MNKD. Let's come in here and create a new portfolio. And we're just going to call this seasonals. And we'll just give it the month of May. All right. So we're going to say seasonals. And that was MNKD, right? MNKD. MNKD. All right. Ooh, that thing's just been going straight down. But it says between May 14th, now today is the May 8th. So May 14th to June 24th, 82% of the time over the last 17 years, calendar days, 42 calendar days, average profit has been 25%. That's pretty good. But look at it over here. It doesn't look like it's good over here. I mean, this is down, right? But that's good. I mean, market turn around, start going back up with the rest of the market. But look at this. We got our first drive here. We got our little counter trend. We got that drive right there broken half. That makes it that little teeny thing ends up being the third drive. And then we got this last one. If you kind of just have to kind of merge that one together to call it a 3-drive pattern. I mean, it's a 4-drive pattern. There's your 3-drive pattern. Drive 1, counter trend, drive 2, counter trend, drive 3, and we're at the bottom. That broke right there. It's just a caveat. But hindsight, you can tell that was those two should be merged together. But we come in here, and there we go. Now we're coming down with the third drive. We're coming down with one more. Broke it. The question on this one is it can't go below here. This thing's struggling for a market that's supposed to be rallying really hard. Let's go look at the fundamentals, MNKD. Let's go see how this thing's doing over here. Right here. Let's pull up MNKD. MNKD. Ooh, earnings per share is up from all these were down. Sales in billions. Holy cow, look at that thing. It's going straight up, outstanding shares. But why is it like this? Mankind earnings snapshot down 6%. So that's not good. Mankind corporate financial. I don't know if we want to add this to our portfolio or not. This is kind of a weird one. See, when you leave the S&P 500, you get some weird ones. I don't know. Makes you want to, well, it's a $5 stock. Oh, we're down here in the penny stocks. No wonders. All right, let's fix ourselves here. Let's come in. Wait a second, that's not what I wanted to do. Where is it? Here we go. Let's come in, and we can go and spend a whole bunch of time looking at some of these penny stocks. What's the average? Where's average daily profit? I'm trying to find the share price. Got to be in here somewhere. Total wins, trading days, quantity. Does it have average share price? Total wins, no. Average daily profit, max gain. The average profit, it doesn't have the average share price. I thought that would be something that would be in there, but apparently not. All right, so let's come into our settings and let's skinny this down. Let's just come down to the S&P 500 because we like to do options anyway, and most of these little things aren't going to have a lot of options on them. We'll just scan this S&P 500. Let's redo our scan. I know those are fun, but we're going to do the S&P 500. All right, almost done here. All right, here we go. Let's come in and scan this one more time. That gives you 329 out of 1,000. So that's better. The S&P, and then we got the green ones. Let's sort by win ratio. There's 100. There's EVGO, and it's green. Broadcom. Oh, that one come up again. That's right on top. Let's go look at Broadcom. AVGO. We're going to kill this little guy. AVGO. Oh, look at that baby rock and roll. Almost makes you feel like well, what's the date on it? Because it's like you're a little behind the 8 ball there, Lynn. What's the date on that one? May 23rd to June 9th. 100% of the time over the last 15 years, that thing's averaged 7%. May 23rd. So what is today? 23rd, May 8th. So it's estimating to be right out about here somewhere. Oh, let's draw this tool, not that one. May 23rd. Preferences, we're going to go vertical on that one. So on that day, this thing says it starts to rally. Now, given that, if we come in here, we got our nice little 3-drive pattern down. We got drive 1, counter trend, drive 2. This is our counter trend, drive 3. And then this thing started to take off like a rocket ship with the rest of the market. All right, so come on, man. Control. There we go. So if we take this and we draw our natural trend line right straight up that baby like that, we have it's even going a little sharper right up in there. But this is our blue light. That's what gives us the drives, right? That's what's mathematically calculating the drives. So this right here is A1. So it's X3 S A1. That's a really high probability that that market's going to rise. Anytime you get an X3 S A1, back the truck up. All right. So there we go. So that's our X3S. That's our A1. That means this is A2 right here. A2. And so an A2 is the confirmation that that A1 is working for you. So now you back the truck up with this one. This one here, you back up the pickup truck, put everything else you got in there. This is where you sell the house, sell the farm, sell the kids. And then right here, this little tuffet, right? This little pennant formation right there. I know it's ugly, but it is what it is. Can't draw them. That tool's backwards. All right, so there's our little pennant formation. That right there becomes A3. And if that's A3, wow, that's A4. Don't usually get A4s, but sometimes you get an explosive market and you get more than 3 drives. So there we go. We got a little tuffet there. We got another little tuffet right here. Call them pennants. I call them tuffets. Today I do anyway. Today I call them tuffets. So there's another little pennant formation, little triangle wedge pattern right there. So those are what you're looking for. You're looking for the overall longer term trends. Drive 1, drive 2, drive 3. Inside each drive, this is the first drive, drive 1. This is the A drive. That's why those are all A1, A2, A3, A4. Those are opportunities to get into the market as the market rises. But as the market continues to rise, the odds of success go down, right? So this being an X3S A1, oh, come on. We don't want that one. A1, we give that a really high probability of success. We say that's about like a 75% chance that baby's going to rise. And then we get the A2. That's another really high percentage. We're going to put 75% chance on that one too, that baby's going to rise. But then as we start to go up the list, A3 as like usually at A3s, we're already feeling like we're topping out. So this A3, we generally figure it's got probably, we're going to say that A3's got, let's give it just a little less than 50%. We're going to say 45% chance that baby's going to rise. And then an A4, we're going to give that way down here into the 20%ers. We're losing mojo up in here. All right. Now, those numbers have not been back tested and calculated historically. That's just my swag, my scientific wild ass guess from my own personal experience. All right. So these are really high. X3SA1s, really super high probability you're going to get that rise in there. The A2 has a really high probability it's going to continue the uptrend. All right. So that's why I give it a 75, same as this. Once you go up about an A3, though, then you kind of lost your mojo. That's kind of like we're starting to get up into the high end of this thing. This one's gone up into a 4, so you're even losing more. So the chances of getting in here and having a successful trade, pretty low. And the reason is because oftentimes once it starts getting up this high, the market doesn't move high enough for you to be able to get your stop up to break even before it comes back down. And remember, this thing's got to break this blue light to end drive A. So it can get a little pullback back down into the Fibonacci cone of probability, right? Delta cone of probability, or the Fibonacci sweet spot's what I call it. We don't know how high that's going to go. We can make an educated guess using these yellow bars in here. So we take, because that's the neutral bar on the way up. So we take the Fibonacci sweet spot, we lay it over the top of those yellow bars. It's just kind of a little trick you can pull, and you kind of center it over those yellow bars the best you can, because that was the neutral zone on the way up. So we're going to expect a neutral zone on the way down. So if that comes back into the neutral zone, then that becomes our target, or what we call our Fibonacci extension, all right, or Fibonacci projection, not extension. Extensions go above that. All right, we can turn on extensions just because I said it. Here's projections right here. So display projections. That's out here and further out, all right? Those are the further out ones. So this right here is our projection right here. And those are our extensions up there. So we're projecting that the market's going to go to that B line. So that's where we kind of got this thing drawn in there. And that would be an A4 to take us up there. And then we're going to expect this market to kind of loses power and start to come back down and test this low down in here, test this sweet spot right in here. It's got to come down and break those blue lights. And that's mostly what we're looking for it to do. Come back, go up, and then come back down. And probably 38.2, it might break those blue lights, maybe a little earlier up in here. And then if it dances around in here a little bit, goes a little bit, turns and sideways, and then goes back up again, that would be going into the B drive, right? So that's where we'd come in here, and this would be B1. All right, so that would be our B1 down in there, and then we would do the same thing. We'd have a B2, B3, B4, and that would be your second drive up. And then we'd look for a third drive, which would be the C1, C2, C3, and that's how you trade. That's how you look at your probabilities. And the higher you get in these numbers, the lower the probabilities of success, right? Because the higher the market goes, the more it's going to have less likely to keep them going. It's going to turn and flush back down. So that's why the odds go down as the market goes up. So 75, 45, 20, we're getting up there where the odds are pretty good that this thing's not going to be able to maintain it. Now, it doesn't mean it can. It certainly can. There can be reasons why the market might just keep right on going, just right straight up and never turn around and come back. It's just really rare to have a market do that. You can find examples of it, but that's really rare. Usually you get something like this. You get these little drives, right? These little pullbacks. So as it rallies, we're going to look for a little pullback. And we can measure that and anticipate it and then calculate based on what markets have done in the past, what we expect them to do again here. So we have a probability, it's delta cone of probability. The probabilities tell us that it'll come back down into this little sweet spot in here. If it's got a lot of strength, it might not come all the way into the sweet spot, all the way to 50, 61. It might just come down and touch that 38.2, which is a really popular thing for markets to do. Hit that 38.2 and start to go and rally once again. All right. So that's what we're looking for. We'll look for that market to come back down here. We don't want to be buyers right now, but this thing does say, seasonally speaking, it says that May 23rd to June 9th, 100% of the time over the last 15 years, this thing's returned a 7% return. So May 23rd, we're going to start looking for this thing. Now that's an average, right? An average on May 23rd, an average of June 9th. So you have that window. A lot of people will just go ahead and buy right on May 23rd. They like to just do it right then. Just say, why wait? But me, I like to be a little bit more strategic about it. I like to look at my counts, my measures. I like to look at my Elliott waves and Fibonacci's and my cone of probability, my one standard deviations. And I look at my indicators and I try to make more of a swag, more of a scientific wild ass guess, more of a scientific guess at when this thing's going to turn and start to go up and not just take the number. But the number tells me that the odds are in my favor after that red line that thing's going to go up. So if we can get a little pullback down in here, and then that's where we're going to want to be buyers right in here. If it's there. If it's not there, we might not take the trade. We'll have to wait and see. Don't know. But that's a good one to watch because the setup for this thing is really clean. I mean, right now, the odds are in our favor that that's going to be pulling back down in here around the date that it's supposed to start that next rally. So I like that one. This is a good one. All right. We're going to leave this one on. This is a good watch list. So that's a Avco. Put that one on your watch list. We like that one. We're going to add that one. Okay. Click that one. So over here in a neural network, we got this one in our list now. So we're going to come down. We can look at some more. Now we can sort a little bit faster. All right. We can take some of these. But we got these this score. Look, this is a 5 and it has 100% return. Now it's only a 5% average profit. It's not the highest average profit for 46 days, but 5%, a lot of guys will go put their money in Cash Valley Bank and they'll wait an entire year to get 5% on their money. And this is going to give you 5% in 46 days. All right. Or on average. I mean, it's not, and of course, nothing's guaranteed. Past performance is not necessarily indicative of future results, but it's just the best we got. So let's go look at VRSK. You guys ready to look at VRSK with me? VRSK. We'll go over to charts. We'll pull up VRSK. All right. Woo. Look at that baby taking off and going to the moon. What's our seasonals on that? May 27th. Oh, that's not clear till the end of the month. But that makes sense. 100% of the time over the last 15 years. But at the end of the month, that's like 3 weeks out. Let's say the 27th, right? 27th. So if we come in here and draw a vertical line on here to the 27th, right? It's right there. Let's change this. We're going to be using this a lot. So, all right. It's kind of an ugly market, isn't it? Not real pretty, trendy market. One up for every down. Let's draw our trend lines in there. We got one big, long, ugly down. I mean, beautiful down. That was a nice, pretty down. And then a nice, pretty up. And then this stuff went nasty on us. Look at that. What was that bar? You know what? I wonder. I've never done this before. Should we try something new? Let's try something new. I don't know if it can happen or not, but I want to give it a shot. Let's come in here with our little camera tool. And we're going to snipping tool. We're going to come in here and we're going to grab this little baby. And I'm going to take that right there. And I'm going to highlight this bar right here with red. I'm going to draw a circle around it like that. And I'm just wondering if we save this, right? And we save it down here to my desktop. We're just going to save it here to the desktop. So now I have that file saved to the desktop. And I'm going to pull up. We got ChatGPT? We do. ChatGPT. And we're going to come in here. We're going to go to the O3 reasoning model. All right. And we're going to take this little screenshot that we just took. And we're going to drop it in there. And I'm going to see. Let's see. Let's ask ChatGPT. I've uploaded for you a stock chart of VERISKAANALYTICS Analytics Inc. VRSK. Now I'm going to ask ChatGPT, can you look back in history and tell us what happened on that day? What was there? Was there an event, such as earnings or something, What caused that big drop I've circled in red? Do you think ChatGPT will be able to go out and see? I've uploaded for you a stock. Oh, I should have probably hit search on there so I could search the web, and I didn't do it. See what it comes up without searching the web. It says it's thinking. I put it on the 03, so that's the thinking model. So it takes a little longer. I'm going to take this and why it's thinking, because it might take a few minutes to think. Oh, here it comes. Researching VRC drop. Okay. I'll search for news articles or earnings reports for VSR car around February 27th. To find out what caused the drop, I'll use search terms like VRSK February 27th drop, VSK stopped, earnings, guidance, analytics. Once I find a source, I'll check the context and confirm the dates. There's a drop. It's searching the web, so I didn't have to click search. It already guess it worked. I'm analyzing the screenshots and trying to confirm if the drop happened on February 26th or 27th. The circle region could involve more dates than the price dropped around $40 from $300 to $260, which is 13% drop. It looks like the Yahoo data from February is a bit confusing, showing an open lower than the low. Let's go into Reuters. This Heikin-Ashi chart bars exaggerated the drop, making it look bigger than it was. The Yahoo data seems strange, showing an opening lower than we should probably turn off. Maybe we could turn off. It seems the Heikin-Ashi chart exaggerated the drop with a seemingly larger than usual move. I'm now searching for Verisystic drop in data analytic on 27th. Sees the source. Let's come down here. Why that's doing that? Let's turn off Heikin-Ashi because I do have Heikin-Ashi turned on. I don't know. It says that the Heikin-Ashi bar exaggerated it. I don't think so. Maybe that's just a bad tick. I don't know. It's searching. It's going to tell us what it thinks it found. What triggered the plunge? You circled the long red bar that points to 27th of your track and trade daily view. Wednesday, 26 Q. Versix beat Q4 consensus on revenue. So that was an earnings day. Let's bring this full screen. Why the bar looks so dramatic? It's not. Heikin-Ashi made it even look less dramatic. In the next day's session, the stock gapped lower on heavy volume. It finished the day down 4% from 1.6 million, more than double the 50-day average. Versix consensus on adjusted earnings. Versix also warned that insured losses from the Palisades and Eaton, California wildfire could reach $28 billion, reminding investors catastrophic-related headwinds that highlight that headline did not cause the big candle you marked, but it's set a cautious tone ahead of earnings. Takeaway futures watching earnings days guidance headline beats and misses drive the first move. Always check the company's earnings calendar. Overlay volume on a volatility indicator, big candles, price drops. Let's ask it one more question. What does VERISKANALY do? What's their business model? And why would the fires in California cause the stock to plunge? Thinking. That's going to take it another minute. Why that's thinking. I should have not asked the thinking model on that one. I should have asked the other one. Okay, let's come back while that's doing its little thought process over there. Let's come back over here and look at what our next one is. So we got 94%, and it's got a nice, let's sort by average profit, see if we can get some big profit. Look at that one. Dexcom, 81%, 13% move, 81% win ratio, May 23rd to June 19th, Dexcom. Didn't we already look at Dexcom? Oh, that was Broadcom. Broadcom, Dexcom, whatever. All right. Okay, what was the symbol? DXCM. DXCM. Dexcom, Broadcom. Oh, look! Ooh, wow! Look at that market. Holy cow! Another one of these rocket ship blast offs. So we had the big flush down here, and this market is making a massive retracement. Look at that baby go. So this was X2S A1. Most of the market made X2S A1s. They didn't make it. We didn't get a lot of markets with X3S A1s. Markets rebounded mostly on X2S A1. The S&P is still searching. I shouldn't have asked the Chat GPT Model 3. It's going crazy trying to figure out. Oh, just tell me what they do. All right. So this is X2SA1, which we know we oftentimes will give that like a 55% chance of being the bottom, right? A little bit more than half. I mean, you could go down to the third drive, but when we're in a bull market, the ABC pattern, that's usually the bottom. So we give it better than half, better than 50%. And then this market came back with the first little pullback in here. We have another one right there. I hate to do it that way, but it is what it is. This is an A2 here. And then this one here is A3. So we're in an A3, and look at that baby rock and roll out of that A3. That's crazy. There's our A2. There's our A1. So A1, we oftentimes miss the A1. Remember, A1s, oftentimes we miss those because we don't know where that bottom is going to be. And so we miss the A1s a lot. And we always say, don't chase the A1s. It's the A2s that you want to get in on. And that A2 was a good trade right there. And then that A3, man, it rocketed to the moon, didn't it? Holy smokes. All right. What does Risky Visky actually do? Core franchise, Versky Risky, is a pure play data analytical company for a property and casualty insurance industry. Well, that makes sense. That's why the fires down in California made their stock jump like crazy. It gathers decades of loss recordings, characteristics, and claims outcomes, turns raw data into subscription software that underwrites actuaries, claims adjusters, and reinsurance for everyday. Flagship, wait a second. ISO underwriting and rating, standardized policy forms, actual loss and premium rating engines. This is not an insurance company. These guys actually do the analytics behind the scenes for the insurance companies. Air worldwide catastrophic models, probability models that estimate insured losses of hurricanes, earthquakes, wildfires, civil. You know what? This is really funny because this is how insurance companies have their odds, right? Insurance companies will give you your insurance policy based on the odds. They have worked out all these big odds tables. That's what this company does. They do the odds for the insurance company. So they're like, what are the odds Land's going to die? He wants to buy some life insurance. And Land wants $1 million of life insurance. What are the odds we're going to have to pay him $1 million? Let's go in and test his blood. Let's test his this, test him that. Let's do some, see, does he walk in the morning? Does he walk at night? Does he drink beer all day? Does he snort cocaine? What does he do? Is Land, how long is Land's life going to be? And they ask all these questions to find out how long you're going to live. And that's your odds, right? That's what this company does. They do the odds for the insurance companies. That's pretty cool. And the reason I'm kind of intrigued by this is because I think I showed most of you guys that have been here before in my class, that I'm working on a calculator. We got stumbled on it a little bit, because I'm not a programmer. So I've been having Chat GPT help me write this program. And I had to go to Grok, and Grok got stumbled a little bit. I'm asking it to do a little bit more than it right now has the capability of doing. And I've been working on Gemini. I got Gemini too. This is Google. So I got 3 AI systems. I've got ChatGPT, I've got Gemini, and I've got Grok. All 3 of these AI systems have been working on my new little calculator. And I think I introduced some of you to it, and it's really cool. pitnews.com. Don't go here and play on it because it's not ready. But I'll show it. Oh, it's dead. What happened to it? Why is it dead? Well, that's why it's not working. That's why I haven't released it. So anyway, that's why it's not working. But I've got ChatGPT, Gemini, and Grok, all three working on helping me program this calculator that calculates how long you're going to live. It's really cool because you put all this out, you answer all this information, and then it goes in and it says, Lan, you're going to live to be 95 years old, or Lan, you're going to live to be 75 years old. If you cut out that cocaine and that hard liquor that you're doing out there, you'd probably live a little longer. So it does that kind of stuff, right? So it's really cool, and gives you an estimate how long you're going to live. Now, why would you want to know that? Well, you want to know that so you can plan for your retirement. I thought that, putting those two together, if the insurance company comes in and says, hey, we're going to do the odds on you to see how long you're going to live so that we can sell you an insurance policy, and we know what your premium is going to be so that we know, we're going to, they're in the business to make money, believe it or not. So that they think you're not going to die within that window, they'll give you a big policy for a low premium. But if they think you're going to die, well, high premium, low policy, right? So that's how they do it. And I thought, well, you know what? It's really hard to plan for your retirement if you don't know how long you're going to live. Am I going to live to 90 or am I going to live to 70? That makes a big difference on how much money I need for my retirement and how I spend my money. It's like, well, I got this much money. I'm going to die at 70. I'm going to spend wild and crazy right now. I only got 10 years left. I can get rid of this stuff. Spend my money. Go do shit, right? Oh, I'm going to live till 90? What the heck? Why am I going to live to 90? Oh, no, I'm going to live to 90. I don't have enough money to retire. I'm going to have to do a little bit more savings here, a little bit more investing. Makes sense, doesn't it? It made sense to me. So I put those two together and come up with this little idea where we can calculate how long we're going to live, and then we can do estimates on how much money we need to so we don't outlive our money. And that's the idea, right? So we know how much to. That's a neat little calculator. I've been working on it, and I got it to the point where it almost works. I mean, at least at this point, it's pretty good at predicting how long you're going to live. So that was the core process. And if I would give up all that cocaine and hard liquor and drugs, I'd live to be like 90. But, with all the hard liquor and the smoking cigarettes, 12 packs a day, and, snorting cocaine every day, I'm not going to live very much longer. So I could, it's one of those things. I started to think, well, you know what? We could reverse engineer this too. And we could say, well, if I have this much money, this is the way Lad's brain works. If I have this much money, and if I live well, I'll live to 90, but I'll outlive my money by 10 years. Well, I don't have enough money to live to 10 years. So what do I need to do so I die, so I don't run out of money? Well, you need to snort some cocaine and drink some alcohol and, live it up a little. Oh, okay. That'll kill me at 70 and then I won't run out of money. Yep. Okay. That's the way we're getting. All right. I guess I better go out and start looking for some packs of cigarettes so that I don't outlive my money. That's the way Land's brain works. All right, I don't have enough money to live to 90, so I guess I better do something about that. All right, so that's enough. That sideline. While we're here, let me take just a second. What's really cool is that I talk about all this stuff in Pit News Magazine, and some of you are going like, "What? Pit News Magazine? I've never heard of Pit News Magazine." Well, here you go.
Hey everyone, it's Claire here. Are you ready to take your trading knowledge to the next level? Welcome to Pit News Magazine, your trusted source for trading intelligence. Whether you're a seasoned trader or just starting out, this magazine delivers the insights you need to stay ahead of the market. Featuring articles from experts like Dr. Scott Brown, Aidan Gray, myself, and of course Mr. Lan Turner. Pit News brings you exclusive strategies, deep dives into market psychology, and powerful trading techniques. Find out about the exponential power of growth, seasonal trading secrets, and even Lan's latest wild eye, crazy eye iron butterfly strategy. Each issue is packed with expert trading strategies, top stock picks, key seasonal trading insights, and comprehensive analysis of commodity futures and ETFs. You'll also find tips on technical analysis, option strategies, and much more. No matter your trading interests, we've got you covered. And the best part? You can learn your way. Listen to each recorded article, read the full in-depth lessons, or watch our video breakdowns. It's trading education on your terms. Right now, we're offering a special deal. Get your first full year of Pit News for only $19.97. That's 50% off the regular price. 12 issues of powerful trading insights, backed by our 100% satisfaction guarantee. So, don't miss out on this limited time offer. Head to pitnews.com and subscribe today. Empower yourself, enrich your trading strategies, and stay informed with Pit News Magazine. Trading intelligence right at your fingertips. Okay, let's get back to Mr. Turner. Thanks for sticking with me.
All right, let's go in and put our Fibonacci ruler on this thing. So we're going to draw that out there. It's still going up, so we don't know how high it's going to go, but you could do that same little trick. We're going to center that over there, and it's already exploded past our original projection. All right, so there's our yellow bars. We put those yellow bars inside of, from the low to the yellow bars inside the Fibonacci sweet spot. That's the one standard deviation projection that we'd expect that market to come back to off of here. But the problem is it broke that. So we expect this one here. That's at A3, but man, it took off like a rocket ship. This Dexcom's doing really well. So we got to come in here and we put projections on there and display the projections. We're up here at 127 right now, headed for 161. This would be the high right up in here. And we turned that the other way, didn't we? There we go. So that would be the next target up around 161.8. If it breaks through 127 and holds above it. There's just nothing but blue sky up there. We got another line right here. It's more of a kind of an area of resistance, right? We got these specific areas right up in here. So that's where that thing looks like it's headed before it retraces and bounces back down. If that's the case, we'd have to stretch this Fibonacci ruler up a little higher. And look how far back that blue light is. It's really leaving it in the dust. So if we take that all the way up to there, let's say it goes up just to there. We can say let's go up all the way to the previous high would be up in there. I don't know if we can do it all in one fell swoop. You don't usually expect it to go all the way up and test that high in one fell swoop, but this market's just like on fire. Look at that thing. So we'd need it to come up and then flush. Now that's what Palantir did, right? And we're all lovers of Palantir. We need to go talk about Palantir. So don't run off before we go talk about Palantir. And Palantir is not one of our seasonals. So we'll do that last before the end of class. We'll go talk about Palantir. And we have to talk about that because it's getting ready to take off again today. Did you see it? Oh, look, we're getting distracted at the squirrel. PLTR. We got to go look at this thing. Let me show you. Look at this. Look at this. This on the morning bell. Look at the 1 minute chart. Look at that thing. Let's turn on Heiken-Ashi. That baby took off today like a rocket ship. Holy cow. Oof. Oh, man, that was a big run. So didn't even come down and break our blue lights. What do I think it's going to do? Well, I need it to break those blue lights. So could it just turn the earnings, you saw the earnings. We read the earnings yesterday in class. Was it yesterday or Monday? Or Tuesday it was Tuesday. Tuesday, we read the earnings, and the earnings were just like absolutely phenomenal. So everybody was like, well, why did it flush on such good earnings? Well, because there are other games at play in this market, believe it or not. So they need it to flush. They need to get all these people to buy in and then flush it one more time so they can take your shares. They want your shares. There's only a limited number of shares. And if the big boys don't have them, they need to scare you out. Now, the problem is they might not be able to scare you out. Nobody's giving up their shares. Nobody's like, I don't care. I don't care where this thing goes. I ain't giving them up. So if you don't give up your shares, it doesn't do them any good. They're selling here, trying to get the market to go down. Nobody's taking the other side of it. They can't get anybody out of this shake. They can't shake you out. If they can't shake anybody out, they don't have a choice. They're going to have to make it go up again. Like in here, see, they just couldn't shake anybody out. Nobody wanted to shake out back here. Look at these markets. They try to shake you out a little bit. Nobody shakes out. The Palantir's like, look at that. Barely come back 38.2. Look, we got distracted. I wasn't going to do this till the end of class. Look at that. Did it even come back to 38.2? Again, they couldn't shake you out. Nobody wanted to shake out of these things. That's even clear back here, a 3 drive pattern like that. Look at that. And then this next one, Would you stop that? And then we got this one here. And then look at that one. They tried to shake you out. They got you shook out on that one a little bit. They got back down into the 50% range, and then bam, that thing took off like a rocket ship. And that thing went up, straight up, like somebody gave it a big dose of Viagra, man. And then that thing came back down. They shook you out here. I don't want to. Let's leave this thing in here so you can see this massive move this was. So that come all the way up to here. And then look at that. They shook you out good all the way back down to 50%. They just like a train on rails. And then that thing took off again. And another little ABC in there. And man, look at that thing. Straight up. Straight up. So if we take this, let's just move this down. Oh, that kind of got rid of our scaling. But you can see, man, this thing would bring it all the way up to here. Up to here. And then all the way up to here. Squeeze it down, Lan. No, I don't want to squeeze it down. This is comparative to what this market was doing. And then bam, that thing flushed them with this last remaining toilet flush that we had. Let's turn on the fib line 78. Came right down here to 78.6 right there. And then rallied all the way back up. And then flushed one more time, gave us that ABC pattern. And now we're on that next run. So if we bring this from here to here, we're just measuring. That's all we're doing. It's just a ruler. And look at that, almost the same size. That one there to this one here. That's how big that was. Just a little bit shy of it. Now it's coming back, and it didn't even come back to 38.2. There's the blue lights. It didn't break the blue lights. It's very concerning. It's very concerning to me. I need it to break the blue lights. Not happy if it doesn't break the blue lights. But man alive, it's just going like a rocket ship. What do you think it's going to do, Lan? I think it's going to flush again. I think it's going to come back down. I think we're going to see it break those blue lights, or at least go sideways for a little while. This market's never going to go sideways, but it might go sideways. We might have a little bit of this kind of thing. A little bit of this action could happen. Could go right there. But I don't think so. It's got to break those blue lights. It can't just take off and go from here. It can't do it. When you say it can't do it, that's when it does it. This market is just so on fire. I want it to pull back a little bit more. Why? Because I want to put more money in it. I don't have enough money in this market right now. I put a lot of money in here, and I rode this thing up. I made so much money. And I sold out all the way up. As it started up in here, I started to sell off. I didn't sell it all off, but I put a put option up there to protect me to the downside. And I made a bunch of money on the put option as that thing flushed. But it wasn't profit. It just kept me from losing money on my long shares. I took the profit off of that. And my put options weren't enough to cover the full thing, but now it's starting to come back. But that's just in the PLTR. I also have like $100,000 sitting over in PLTY. So I'm really heavy into this market. I love this market. Anyway, I want to see it pull back farther. I want to see it make one more dump down here. Come on, you can do it for me. Please come back one more. Come back to 38.2. I would really like to see it come back to 50. That would be sweet, man. That would be amazing. And then you can go to the moon again. That would give us a one drive, counter trend, drive two, and away we go. That would be classic, right straight out of the manual. But if it takes off right here and starts to go, then we're in trouble. It's too steep, too fast, too far, too fast. And then we're going to end up with a GAN fan. You can't do it. It can't do it, Lan. It can't do it. Look at that. See that? all the way up that thing. It's between 1.3 and 1.2. That's just too high. It can't do it. Can't maintain it. So it fell back into the 1.2. I want to see it come back and touch 1.1. I want to see it come back here. Come on, baby. You can do it for me. If it'll come back there, well, we'll be really happy. Let's do our Fibonacci over our GAN fan. All right. Yeah, and we'll see where that's at. Oh, yeah. There's Land's target right there. Target price. That's where I want to see it go to. Is it going to do it? Nobody knows. It's a wild ass guess. It's a scientific wild ass guess. But that's where I would like to see it go to so that we can buy a whole bunch more. We'd load up, we'd back the truck up, man. We would sell the farm. We would sell the kids. We'd sell the children if it would come back to there. Come on, Palantir. Don't you want a few children? All right, let's get back over to what we were talking about here. We got to go to, oh, I think we got our answer. Hold on a second. Why am I losing control here? Here we go. All right, but I think we got an answer to our didn't we ask it an answer? Ask it a question. Yeah. Here we go. Why California wildfires matter to VersaSick. CAT model credibility and liability risk. Budget pressure on customers, see, it's their clients, they're the insurance companies, regulator and pricing, knock-on effect, guidance application, putting the plunge in perspective. Okay, here's putting the plunge into perspective. Magnitude, the OHA drop, they're in a Heikin-Ashi candle average price. Knock it off with a Heikin-Ashi bar. Give you doesn't like that, does it? Forward earnings per guide consensus, management components, wildfire related insurance loss and reinforced cautious outlook, elevated volume. Anyway, it was an exercise in trying to see if ChatGPT could tell us something, and it did. It was really cool, right? Bottom line, VersaSick sells the picks and shovels, data, models, and software the insurance industry needs to quantify risk catastrophic likes the 2025 California wildfire remained the street and model accuracy. Clients' budgets and regulatory shifts can all torque that otherwise steady high margin business, hence the sharp reaction you saw on the chart. So their clients are the insurance companies. They sell their data to the insurance companies. And since the insurance companies are going to struggle, they were worried that maybe that would hurt this company too. There you go. That's why it did it. That's pretty cool, right? That we can ask ChatGPT things like that. That was this one here. That one. Was it? No, it wasn't. This one. We asked it why it didn't like that. What happened there? And they said that was because of the wildfires. Probably this too. That's probably why this thing's a little sketchy. But man alive, what a market. What a crazy market to trade. Look at that perfect little 3-drive pattern right there. 1, 2, 3. Little ABC. Boom. Didn't even do it. A little ABC. It got a 3 times a charm. Charm 1, charm 2, charm 3. Oop. Charm 3. Then that took off with a little ABC pattern. A, B, C. Whoop. Right up to 61.8. Flush. So even in all of this stuff, our little mathematical model picking tools here really could help a lot in predicting these market directions. One up for every down, up, down, up, down, up, down, up, down, up. So we're on the next up. Where's the next down going to be? I bet we get some sort of an up in here, and then a down, and then this would be the next up on this seasonal trend. Maybe not be quite that crazy, Lan. It might not be that crazy. Might just be a little down. But we got a little up going right now. And we're having a little up happening here. And then it's going to probably have a little down in here. And then that's where the next little up will go. All right. So we'll look for up, down, up, down, up, down. So up, down, up, down, up. and see if that up won't happen right around 527. Anyway, that's BRSK, and that's a good one. So we're going to keep our eye on that one. All right. What's the next one? Let's look at, we got 1312. We don't want that one. Like that's red, 0.92. That's low probability. Let's look at this one. DECK, Decker Outdoors. Hey, you might think that maybe Decker Outdoors, some people would think fundamentally speaking, they would want to do a little work on their home and some of their products, right? Decker makes a whole bunch of tools and stuff like that. Home Depot products. All right, May 22nd to June 9th, 82% of the time over the last 28 years, it's made on average 10%. That's pretty good money, 10%. So let's go look at DECK, D-E-C-K. D-E-C-K. Holy cow, what an opportunity to buy Decker Outdoors Corporation. You want a little Decker? Buy some Decker. Wow, that thing's flushed on that last run, didn't it? That thing got nailed to the wall. What a market. Holy cow. This thing usually pretty go. There's our nice little 3-drive trend right there. Drive 1, drive 2, drive 3, counter trend. And then go sideways. Then we get, would you stop that? And then it goes here. And then flushed like a toilet. Wow, what an opportunity. All the way from $225 to $100. Man, that thing lost a lot of money in that run. Holy cow. Now they're coming back. Well, where's the break? There's the neutral bars. There's your green. There's your sign right there. Holy cow, that baby's on a rock and roll move. Wow. You want some of that? You want a little bit of that? Where's it going to go to, Land? It's going to go back up to here. Where do you think it's going to go? It's going to go all the way up to there. Is it going to go straight up like that? No, of course not. It's going to go up, down, up and down, up and down. But it's going to eventually get right back up to the very peak up in there. Whew. Decker Outdoors. Let's go check it, though. Let's do a little. We're not going to do the 03, though. That's too slow. Let's go to 04, 40. And let's come in here and say, now here's my concern with this company. All right. Where do they make their stuff? Most of their stuff's probably coming out of China. What is DECK, Decker's Outdoor Corp primary product line? What makes them the most money? Now I'm not doing I'm just doing 40, so I should just kick this out to us real quick here. Not the thinking model. Okay, Decker Outdoors, primary product line by brand in order of revenue impact. Iconic sheepskin boots and lifestyle footwear. Wow, how about that? Classic boot slip. I thought they built like Decker Outdoors. I thought they were like building drills and stuff. No, they don't. Iconic sheepskin boots and lifestyle footwear. Oh, they own UGG. Those ugly, that's why they call them Uggs, UGG, because they're so ugly. Ugly boots. Approximately 55 to 60% of their business is ugly boots. How about that? Have you ever seen these UGG boots? Some of you guys in here, my buddies and pals, you probably have never even seen an UGG boot. You know what an UGG boot is. It's those things. Those ugly boots. That's the business. How about that? Okay. So come back in here. That's perplexity. Hey. Yeah, there it is. All right. What's their next high performance running and trail shoes? Hoka One. 35 to 40% of their business. Bondi, Clifton, Speed Goat, and Arai. Speed Goat shoes? Let's go see what they are just for fun. Come on, guys. We're just having fun here. Allow. What does it want to do? Allow Google to access your location. Okay, go ahead. Okay. Oh, Speed Goat. Speed Goat? Is that what they called it? Speed Goat. Is it all one word? Goat boots, shoes. Speed Goat shoes. There they are. All right, that's Decker Outdoors. Builds Speed Goat boots or shoes. Ugg boots and shoes. I'm betting we're going to go ask. You know we are. Wait a second. How come I'm having struggles here? There we go. All right. Let's come back. And what's this next one? Teva, sports sandals and outdoor lifestyle footwear. Casual beach-themed slip-ons. Coolberry Uggs. Coolberry Uggs. Oh, by Uggs. What the driving business? Seasonals. Ugg dominates the Q3 and Q4 earnings due to heavy winter sales. It's a classic cold weather stock. That's interesting. Not from what we're finding. We're finding that it has big sales in the middle of big up deck. Decker has been aggressively shifting to DTC, own stores plus e-commerce, which boosts margins and brand. Growth engine Hoka has exploded in popularity in a premium running shoe. Hoka has exploded. Let's go see what the Hoka is. Hoka. 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 Well, there they are, Speed Goats. So those little shoes right there are exploding, they said. All right, now you know the question we got to ask next. Revenue snapshot, approximately Uggs, Hoka, total revenue, $4.3 billion. Let's go look before we ask them. Well, let's ask them why we're here. Gotta ask you. Where are their primary manufacturing plants? China. Decker Outdoor Corp does not own its own manufacturing plants. Instead, they use a third-party manufacturing model, and the vast majority of products are made in Vietnam. 40 to 45, largest source, especially for Hoka and Ugg footwear, comes out of Vietnam. Look at that. You can sell shit, and you don't even have to build it. You just go over to China, say, hey, make me this. They send it to you. You put it on the internet. You sell it. You become as big as Ugg boots. Still significantly, especially for components and legacy Ugg production. 25 to 30% comes out of China. Indonesia is 15 to 20. Philippines and Cambodia is 10%. Growing share due to cost efficiency and diversification. What do you think they're going to do? What do you think they're going to do when they got to pay 140% tariff in China? They're going to switch it to Indonesia. That's Indonesia. They're going to switch it to India, where they're going to have 0 tariffs. Why the heck do you think India and Pakistan are fighting each other? It's because India just signed a 0-0 tariff with the United States. India is going to become the new China. All right. That's what's going to happen with those guys. I wonder what's going to happen with those guys. But that's what's going to happen with those guys. I think that they're going to, you know what? I think they're going to work it out. I think this is a good opportunity to buy this company. Yeah, I do. All right, guys. Should we do? We're kind of out of time. Let me show you something really cool, though. The coolness is over here. All right. Oh, that's not the coolness. Where is it? Oh, there it is. Right here. We were focusing on this pretty hard at one point. And then we kind of got distracted by our UBI, Universal Basic Income portfolio. But this does pretty good stuff. If you come over here, we can bring it over here. We put this one into our watch list, but we got a little portfolio over here But these are the ones that we closed out. And by the time we closed out the ones we were doing, we were kind of going down. We were kind of tracking this pretty good. We made $8,000 doing these seasonal trends. And so we kind of lost our mojo and started focusing on other things. But we don't want to forget about the seasonal nature markets. And the seasonals are always highlighted in Pit News Magazine. So as Claire mentioned, Pit News Magazine, everybody wants a copy of Pit News Magazine. If you don't have Pit News Magazine, go get it. And seasonal trades are in there every single month. We highlight it. We talk about the seasonal nature of markets. It's a really good article. And it ties the whole magazine together and brings you the seasonal nature, the fundamental nature of the market, along with a lot of this technical stuff that we do. All right, let's come in and say hello and goodbye to a few people. We got John in here. We got Chad in here. Chad, Bitcoin, you want to go look at Bitcoin? We did that yesterday. Bruce, good morning. It's good to see you guys all here. Glad to have you. And that's all I got for you today. And thanks for coming and hanging out with me. And we will see you guys next class, Tuesday at 8 a.m. Next Tuesday at 8 a.m. All right, have a good weekend. And we will see you on Tuesday. If you have any questions, let me know. Be happy to answer any questions I can.
All right, that wraps it up for today. If you got something out of this, do me a favor. Like the video, subscribe to the channel, and share it with someone else who's trading or learning.
Hey, don't forget to tell them to subscribe to Pit News Magazine.
Oh yeah, definitely subscribe to Pit News Magazine. You'll thank us later.